Hello everybody. Hello and welcome back to the Sovren FX YouTube channel. Sorry for being late, but we're going to have an economic data release in the next 10 to 15 minutes. So we'll quickly go over what you're expecting today and the trade ideas. So today we have the core PPI month on month, this producers price index, and the unemployment claims. Okay, so we want to break the news down piece by piece so that you can get our trade ideas and execute accordingly. So that you can hope my audio is fine. Okay, with that out of the way, let us start with a briefing. So today during the North American trading session, which is the New York session, we're going to have the US jobless claims and the PPI data in focus. So the CPI data we had yesterday was lower than expected, but back to baseline levels. So the markets are pricing in future rate cuts, which led to an outflow in the US dollar. As you can see, before I was interrupted yesterday, we were analyzing the dollar index, and as you can see, let us quickly just switch this to a clear chart. These were our levels, and before I was cut off yesterday, I had marked out this one and these key levels such that we'd actually realize the outflow in USD, and with the USD losing strength, we actually had our trades on gold, which were the bulls, which actually played out exactly as we had plotted them. Okay, so that was what happened during CPI yesterday. So for the dollar to remain bearish, as you can see, the dollar is still bearish. So for the dollar to remain bearish today on intraday flows, we will need to see the initial jobless claim showing larger and consecutive increases. Okay, so the US labor market remains very tight with unemployment rate at historical lower values, the NFP in healthy ranges, job openings are high, and the jobless claims in healthier ranges below 300k. So policy lags are still active, and higher rates will make its impact on the economic sacrifices if in the event the jobless claim still remains below 260. So let us look at what we're expecting. So to 51k, as long as the jobless claims remain below 260k, which is the healthier range, this can give some short strength to the US dollar, as a lot of inflation expectations are priced in with the recent CPI. So with the PPI, which is expected to drop, is already priced in for lower value, so we'll need to see a surprise of being lower than the forecast minimum minimum expectation for the economists, which is 0.2, for it to hold more weight. Okay, so let us look for the trade ideas on the pairs that we trade. So let us go to gold. So this was the CPI data release yesterday. Let us look at the intraday time frame. Also, if you have any questions on maybe how I came about with the analysis, you can ask it in the chat. But let's quickly go over the US dollar against gold. I mean, gold against US dollar, whatever you understand better. So this is gold. Right now we are in the middle of the range between 1965 key level and the 1953 key level. As you know, we don't take trades in the middle of the range, so we'd either take trades above 1965 or below 1953. Also, if you realize, as we enter the baseline inflation, where the fight becomes a lot more difficult, we can see the markets continue to bet on future rate cuts, leading to the outflow of USD. And having a weaker dollar equals more dollars to buy the same amount of gold. Therefore, the price for gold increases. So for buys, we actually want to see breaks above 1965 before we can execute buys. A break above 1965, have a reasonable stop loss. Above 1965. So for you to actually get targets, you want to look to the left hand side. We have clean price action above 1965 all the way to 1970s, which were our targets during the analysis yesterday, for 100 pips. I'm going to start with 1972 with that 70 plus pips. So that was will be the first trade. So in the next 6 minutes, we're going to see what data we actually get, and based on the analysis I've given I've given during the start of the session, we're going to capitalize on these moves. So you just want to see what the jobless unemployment claims are. So for us to get the buys on gold, we'll need to see the claims showing larger and consecutive increase. So here is the data for the unemployment claims. The previous one was an increase, so today they are expecting an increase. So if there's an increase in the jobless claims, you're most likely going to see buys in gold. You could also execute a pullback towards the 1953 key level. With reasonable stop losses. That's around 200 pips. So let's be patient. In 4 minutes, you're going to see the data, and we are going to actually break down the data to understand how it will affect the trades we are looking for today. So let's quickly look at GJ. So GJ is still in its pullback phase, and as expected, we wanted it to bounce from 180 flat, and we weren't there yesterday to execute on the buys above 180. So exactly what we expected. So it broke below, came above, tapped 180 for a retest before driving for 100 pips. So for this this session, we want to see GJ holding above 180, 180,800 for us to validate more buys. For safer buys, we're going to have to wait for price to come above 182 flat. If price breaks above, then retests 182, then you can validate safer buys. This means that GJ is complete with this pullback phase, the secondary phase of market structure. So right now price can do what it wants to do, but once it comes above 182, you have safer buys. So for medium risk buys, you want to execute at around 180,500, and for high risk but high reward buys, you want to wait for price to come below and tap 180 once more. So for intraday traders, I'd have a buy limit here. This would be the most favorable entry because you have a high risk but high reward, expecting price to come towards its highs for around 400 pips, having a stop loss there around 60 pips. Remember that stop loss is for intraday traders. For scalpers, you want to have the small moves, you get in and get out. So therefore, let's quickly just monitor what price is going to do in the next 2 minutes. I'm still not in any trades on GJ. So you are open to ask any questions you might have. So I think the data release, let us quickly look at. So these figures are a little bit late because you haven't paid for the actual terminals. But let us wait and see. So the unemployment claims are actually low. This means that the labor market is still tight, and personally I think we're going to get sales because this shows a confidence in the US economy. The labor market being tight, this means the Feds are going to take it as a signal to get more rate hikes into the year. Before the year ends, they have at least 2 more where they'll increase the rates by 25 basis points. Therefore, I'm seeing sales depending on how investors are going to decipher this data. So sales below 1953. So the sale is happening even as we speak. But we'd like to see closures below 1953 and if price holds below. So until you get those, you're not in any trades. Let us look at GJ. So GJ did a liquidity grab and it's back above 181. So you can get entries on GJ if it retests 181 flat and maintains above. You always want to be quick on your hands while executing and managing trades, because immediately news is released, we have high volume. So let us look at gold. What's going on in gold? So until you get our pre-planned trade ideas, I'm not going to execute on anything. I'm going to delete my orders and wait for price to set up and give me an entry. Sales on gold are validated. Let's just wait for a close below 1953 for our executions.